Good morning, everyone. This is the report of Group 3 Color Green.
I'm Septeros M. Alarcon.
I am Alison Jean Penrad, Andrea P. Berin, and I'm Nalane Kuria. So now we're going to talk about management control techniques. But first, what is control? Control is the process of taking necessary preventive or corrective action to ensure that the organization's mission and objectives are accomplished. If actual performance is consistent with the appropriate objectives, things will proceed as planned. But if not, changes must be made. Management control techniques focus on managers must monitor whether goals and objectives that were established as part of the planning process are being accomplished efficiently and effectively. Three sections of organizational controlling techniques. They are the general techniques, the special techniques, and the advanced techniques.
Techniques. One of the part of general techniques is a personal observation. This is the most traditional method of controlling. Personal observation is one of those techniques which enable the manager to collect information as first-hand information. The written communication. That communication are issued time to time to the organization members. This provides latest information and instruction to the light of changing rules and conditions.
Is record and report. Record to report or R&R is a finance and accounting or F&A management process which involves collecting, processing, and delivering relevant, timely, and accurate information used for providing strategies, financial, and operational feedback to understand how a business is performing. Is standard costing. Standard costing is the practice of estimating the expenses of a production process. It's a branch of cost accounting that's used by a manufacturer. For example, to plan their costs for the coming year on various expenses such as direct material, direct labor, or overhead. Next is break-even analysis or break-even point. Break-even analysis is a technique used by managers to study the relationship between cost, volume, and losses at different levels of activity while analyzing the overall decision.
Data is a method of management control that are often used in control area such as production planning, inventory control, quality control, and process control, etc. Statistical reports can be defined as an overall analysis of report and data which is used in the form of averager, percentage, ratios, correlation, etc. Prevent useful information to the manager regarding the performance of the organization in various areas. Self-control. A person is given freedom to set his own targets, evaluate his own performance, and take corrective measures as and when required. Return on investments or ROI can be defined as one of the important and useful techniques. It provides the basis and guides for measuring whether or not invested capital has been used effectively for generating a reasonable amount of return. ROI can be used to measure the overall performance of an organization or its own individual departments or divisions. It can be calculated as under net income before or after tax may be used for making comparisons. Total investments include both working as well as fixed capital investment in the business.
The next topic natin is special techniques. The special techniques is more on focus tayo sa budget. Budget control. Budget control can be defined as such technique of managerial control in which all operations which are necessary to be performed are executed in such a manner so as to perform and plan in advance in the form of budgets and actual results are compared with budgetary standards. Next, quality control. Uses operational techniques and activities to sustain quality of the product or service to satisfy customers' needs. Next, marketing controls. Marketing controls help monitor progress toward goal for customer satisfaction with product and services price, and delivery.
Human resource control. This helps the manager regulate the quality of employees' developments and daily performances, common control, type performance appraisals, disciplinary program, observation training, and development assessment. Another is financial statements. It gives a summary of the income and expenses for a specified period.
One is the advanced techniques. Number one of the part of advanced technique is the Management Information System or MIS for short. MIS is an information system used for decision making and for coordination, control, analysis, and visualization of information of an organization. MIS manager needs information about the internal workings of the organization and also about the external environment. MIS manager is collecting information continuously to identify the problem and find out the solution. Is the PERT and MERT techniques. PERT and MERT focus to manage project and circle of an activity from conception to the close of the project. The number three is the zero-based budgeting. The ZBB process is a strategic budgeting approach that demands a fresh evaluation of expense during each budgeting cycle.
Is management audit. To check the efficiency of the management, the company's plans, objectives, policies, procedures, and systems of control are examined very carefully. Management auditing is conducted by a team of experts. They collect data from the past records, members of management, clients, and employees. What is the importance of management control techniques? The most important function of management control techniques is to compare actual performances with expected results. This helps the managers understand where they are lacking and how they can improve their performances.
Is the end of our discussion.
Thank you.